Hello everyone, and welcome to another one of our first home buyer workshops. And thank you everybody for joining us today. We are excited to deliver another one of our workshops virtually, which is becoming the new norm these days. My name is Ali Hamid. I am a senior mortgage broker from Ignite Financial Solutions. And in our today workshop, I will be taking you through the steps of buying your first home, clarifying some of the term some people might find confusing if just enter the first home buyer market, available grants for first home buyers and the eligibility criteria. And finally, we will end with a Q&A, responding to the questions you have sent us prior to the workshops, and the question you might come up with during the workshop, which you can type in the Q&A box. Let me bring up where you can find the Q&A box. It would be on the top right-hand corner of your screen. The question with the question mark. That's where you can type your question, and we will try to answer as many questions as our time limits permits at the end of the workshops. Okay. Now, we have so much to cover this afternoon. We'll be driving with a very high speed to make sure we can cover all the important points. Before we take off, I would like to ask you to take a minute to read through the disclaimers that is displaying on the screen. And it would be a good time if you need to get a cup of coffee and then come back. Okay, that's good. Okay, first of all, why you might ask yourself, why Ignite Financial Solutions? Why wouldn't I go straight to the bank and get my home loan from my bank? The simple answer is your bank is only interested in selling you their own loan products, the products they already have in their shelves. Okay, so even if you have a great credit history, stable income, and save regularly, and you may get some very more competitive rates with another lender, they would not tell you. But we are here to help. What I will do for you, I will compare products from Australian leading lenders to find the right one for you, negotiate with the lender for a better term and rates, apply and get approved your home loan the first time, and provide a free no obligation consultation. And with this day's environment, it's people where coronavirus pretty much forced most of us to work from home and work remotely. It did become really easy to use technology, and I am currently having applicants or clients from all over Australia, and I will at the end give you a link to my booking system where you can book your free appointments. Okay, now What you need to know when buying your first home is the home buying process is in 8 simple steps. Okay, how much deposit do you need? What is your purchasing or borrowing power? What type of home loan is right for you? Do you qualify for the first homeowner grants and the other grants? There are some other grants that they have been introduced were earlier in the year, and as well as the first home builder scheme, which was introduced as a result of the coronavirus, which we'll be going through, and we will have a look at the eligibility criteria as well. Now, the other thing is what insurances will you need? Okay, we go through them all. The 8 simple steps of buying your home are as follows. So first of all, what you need to do, you need to obtain a pre-approval to make it clear for yourself how much can you afford to buy, what's your budget. Okay, so after you can do that by just booking an appointment with us, and we get you to send us all the documents that we need to prepare your application for pre-approval, and we submit it with the lender for you, and we obtain your pre-approval for you. The next step would be after you obtain your pre-approval, it's to choose the right home at the right location. You see, when you have a clear idea of how much you can afford and what your budget is, you just narrow your search to what is within your budget and what you can afford, and it would be a much easier process for you, instead of just thinking and dreaming of all those houses that you cannot maybe afford. This way, when you have your pre-approval, it gives you a great certainty of what your budget is and how much you can afford, and you can search for your house with confidence. So after you found a house that you like, you make an offer to the selling agent of that house. Okay, and if your offer is accepted by the vendor, you will be contacted by the selling agent to tell you that your offer has been accepted. In that stage, you do need to engage a conveyancer. And some state the conveyancers, they are required to be solicitors as well. And when you have engaged your conveyancer, your offer was accepted by the vendors. We do need a copy of the contract signed by all parties, to be able to convert your pre-approval to a formal approval. And it would be the signed contract and a copy of the insurance, the building insurance, and the name of your conveyancer. That's what we need to convert your pre-approval to formal approval. Just please note that the pre-approvals generally last for 3 months. And there are some lenders that they do allow you to extend them after 3 months. What you need to do just to update your income verification documents, and your pre-approval would be extended for further 3 months. So after you need to get a building insurance as well, as we said, and you do need to get a building insurance with the lending institutions are listed as the interest party in that certificate of currency that you receive from the insurer. And after you had your insurance, so the process of converting your pre-approval to a formal approval, it depends from bank to bank. Some banks maybe take 2 days, some banks take longer, a week or 2. Okay, it depends how busy the lender that you have selected in your selection, in your product selection, how busy that bank is. Okay, and that can tell you that okay, why some I mean, it must be a reason why some lenders are busier than others. Sometimes they do offer maybe a better product or more suitable products to your needs, and that might be the reason why they are busier. Of course, there are some lenders currently taking much longer than usual, and it's definitely, it's not only the product that they are promoting at the moment, but it's more to do with the coping with the remotely working. And now, after you had your formal approval, you do want to do a final inspection before your settlement to make sure everything is all right, as it is the same as it used as when you went for the first open inspection. And you wait for the settlement date, and at the settlement date, so the last step is the settlement, and the settlement is when you're lending, when your lender would be paying the vendor's lender, or paying the vendors if the house is owned unencumbered, pay the vendor or the vendor lending institution, and you get the keys, and you will have, and your home loan will start from then, and depends whether you have selected to how regularly your repayments to be debited from your account or make repayments. Let's say you selected fortnightly repayments, so the repayment, your repayment will start generally from 2 weeks, a fortnight from the settlements, if you selected to have your repayment done fortnightly. Now, there are these terms that we will be explaining here. As I said, some people do find them confusing, especially if they are just new to the first home buyers market. The first one is genuine saving. The first one is genuine saving. So genuine saving, show you can stick to a budget and establish a regular saving plan. And it is a good practice for when you are locked into making regular loan repayments. Okay, it is like a practice for you. It's like a warm up for you before getting or committing to a home loan. Okay. And majority of the lenders would like to see at least 5% of the purchase price of the property is accumulated this way. Okay, at least 5% of that your contribution needs to be genuine saving. And the genuine saving must be held in the name of at least one of the borrowers. I had cases where people are asking me, I do have the money, but it's in my dad's account. It cannot be in your dad's account. It does need to be in your own or your partner's account. Okay. And the saving must be liquid as well, meaning that must be in a bank saving account, or be investment in your name that could be sold or converted cash quickly, like shares. Okay, so they can be sold and be cashed. The other thing is you must be able to prove to a lender that you have genuine saving, usually with a bank statement showing 3 to 6 months saving history. Okay, so there are some lenders that they do accept rental history, 12 months rental history in substitution to a genuine saving as well. And if that was the case for you, please give us a call and let's have a chat. Purchasing power. okay, how much you can borrow, how much you can buy, okay, and the amount you can borrow, it's really depend on a variety of factors, okay, particularly your personal financial circumstances. These factors could include how much deposit you have, and what can you afford to repay, okay. So basically loans are, you do need to qualify both side of the loan requirements. One is your contribution, okay, how much deposit you have, how much you're going to contribute, and the other side would be your borrowing capacity, okay, which will be calculated on how much money you earn, your existing debt and other ongoing commitments like credit cards, HECS, and some other commitments some people might have, and your actual living expenses, okay. So basically it is the income. When you deduct all the expenses and commitment from the income, you will end up with a surplus of your income, and that would be what the repayments will be, like your borrowing power will be calculated on, okay. And it does depend on the type of property you want to buy, and its current market value as well, okay, because lenders, they do lend up to a certain portion of like the value of the property. You cannot borrow 100% of the property. Of course, there are some options for people who do have like mom and dad here that can guarantee them with the equity in the property. Yes, for those people, the family guarantee is available, where they can pretty much borrow the 100% of the property price plus the cost, stamp duty, and other costs that associated with the purchase. Okay. But generally, it's you can with majority of the lenders, you can borrow only up to 95% of the property value, and that is including LMI, which we'll talk about LMI and what LMI is. Okay, and I am here to help you. I'm here to help you to assess your personal financial situation and to determine how much you will be able to borrow. And you don't really have to be ready right now. And my role is, I do have clients that they came and saw me probably last year, where we sat down and we drew that road plan for them, and to get them ready to the point where they are ready for purchasing their homes. Okay, so even if you think you are not ready yet, still it's worthwhile to book your appointment. Let's discuss it and draw that road plan for you, to have your saving in place, to get everything ready for you, to the stage where you are ready to purchase your home. Of course, you do need to have an income. Okay, it's not what you think that you can afford. Okay, it is, you do need to have an income. You need to show the income is coming to your account consistently into your employer, or if you are self-employed, you do need to show in your tax return that you have made a profits. Okay. The type of home loans, there are simply they are either variable or fixed. Okay, variable home loans are the where the interest rate of your home loans can vary depending on the lenders, whether they increase or decrease their interest rates, and your interest rate could be increased and decreased with it. Okay, and that's where you see like the Reserve Banks announce a rate cut or rate increase, and the lenders adjust their rates. Just here in parentheses, I add this one. What the Reserve Bank announcing is it announces it's not the interest rate of what the bank should give. Okay, the Reserve Bank it's announced the cash rates. Okay, so meaning if you put a cash, you put a deposit, you put a term deposit in your bank account. Okay, what is the minimum required by the banks to like to pay your interest on? Okay, that's what Reserve Bank deal with. And however, the banks would adjust the rate normally based on the movement of the interest rate by Reserve Bank, just to be competitive in the market. So when the Reserve Bank make a change in the rates, the banks would look at the market and say what needs to be, how they can remain competitive in the markets. Okay. Now let's get back to a variable and fixed. So with variable, it's, as we said, it could vary, but fixed is fixed. You can fix your home loan for a set amount of time. There are lenders, they offer from 1 year to 5 years fixed home loans. Okay, meaning that, let's say you fix your home loan for 2 years. Within these 2 years, your interest rate does not change. It doesn't matter whether the rate is increased or decreased or increased. The standard variable rates of the lender that you are with, whether they increase or decrease the interest rate, your rate wouldn't change for that set of time that you fixed your home loan. Okay. Now there are some pros and cons with both of them. With variable, yeah, if the rate is increased, of course, you wouldn't be happy, and you would think. You would have think that it might have been better if you fixed your home loan before the rate was increased. However, with variable, you can make extra repayment as much as you want, and you can repay your loan as soon as you want. Okay, where with fixed rate there are some restrictions with fixed rates. So some lenders, they do restrict you to the amount of extra repayment that you can make into your home loan, and some into when it's fixed, of course, and there are some lenders that they do not allow you to make any extra repayments. I do have lenders in my panel, however, that they do offer, just few lenders that they do that, not many, not majority of the lenders, where they do allow you to have an offset account linked to your fixed home loan. Okay, 100% offset account with your fixed home loans, which allows you to make the extra repayment into the offset account, which it offsets the interest on your home loan. Okay. Split is variable and fixed. It's a mixture of, it could be a mixture of variable and fixed. Why people would have variable and fixed? The majority of cases is for when you do have you can see the lender that you want to get your home loan with offering a competitive interest rate on the fix. However, you know that you can make extra repayment into your loan. So you split your home loans into let's say two. two portions. One would be where you put the amount that you can make. You can make extra repayments within, let's say, that set period, which let's say 2 years. Okay, you make that home loan. Let's say you can make 100,000 extra repayment in 2 years' time. Okay, so you would have the 100,000 as a variable, and you would probably fix the rest to get like the more competitive interest rate. At the current market, the fixed rates are more competitive priced. Okay. Next, LVR. Okay, the LVR stands for the loan to value ratio. Okay, it is a jargon that refers to the amount of money you borrow compared to the value of the property you purchase. Okay, to give you an example, let's say that you contribute 20% plus the fees, like stamp duty and the other fees might be associated with the purchase. So 20% plus the fees, and you borrow 80%. So your LVR, loan to value ratio, will be 80%. Okay, meaning yet that you are borrowing 80% of the market value of your property. Now, what is LMI? LMI, it's lender's mortgage insurance. This is a compulsory if you borrow more than 80%. Of course, there are a very limited number of lenders that they don't charge you LMI. I know one lender that's up to 85%. They don't charge LMI. And in special circumstances like medical professionals, they can borrow up to 90% of the property value without paying LMI. And again, some lenders may allow you even borrow up to 95%. However, most of those lenders, they do offer that medical products currently. Due to the coronavirus, they are not offering that product. Some of them not offering that medical product at the moment, and some of them they did decrease that LVR to 85%. Of course, there are a lender or two still offering that medical product as well. Okay. Now, the important thing to understand is the LMI does not cover you. Okay, so the lender mortgage insurance, it covers the lender. Okay, it doesn't cover you, but there are some products that cover you, which is My Protection Plan, which we can offer you a quote when you book an appointment with us, and we review your finance requirements for you. Stamp duty. Again, this is a tax applied by the state government, and the charges vary depending on where you buy your property and if you are eligible for an exemption. Okay, some states that I know that they do offer stamp duty exemptions for first home buyers. I know that New South Wales, Victoria, Queensland, I believe they do as well. Australian Capital Territory, that they do all offer the stamp duty exemption. Of course, you need to qualify for the eligibility criteria to have that stamp duty exemptions or concessions. Okay. Comparison rates. So the comparison rate is the actual home loan interest rate once the fees and charges are included. So it helps you to compare home loans more effectively. You compare apple by apple. Okay, so when you compare the comparison rate, generally the banks, they do their comparison rate on a set time, so it won't be for the whole term of your loan. It would be a set time, okay, like the comparison rates that you see advertised. It would be for a set time, for a set amount, let's say $150,000, and they do it within like 7 years, and that's how they calculate the comparison rates. So you just go and read the fine print, and you will understand how they have calculated their comparison rates. Cooling off and the cooling off periods. So the cooling off period is a 48 hours or two full days after you sign the contracts. You do have the right to cool off, to come out of that contract and change your mind, okay? And in some states, I know that they do. It might be a fee applicable. I know from clients that I have in New South Wales, the agent or the vendors, they do ask for. Recently, I had one where it was $1,500. They need to make like a $1,500 deposit. Even if they cool off, the vendor or the agent and the vendor, they will take that $1,500. It's non-refundable, like $1,500. But for SA, where I am, is generally after you pay the deposit after the cooling off period. Again, it's a negotiable between the lender and the purchaser, the vendor and the purchaser. And the important thing that you need to know is that auctions, there is no cooling off on auctions. So as soon as the auction finishes and they announce the winner of the auction, that the house is yours. It's you do need to by law to make the deposits and to purchase the house. Okay. Okay. Now let's get to the interesting stuff. So we went passed through all the jargons now, and we get to the stuff where I have been receiving quite a few calls every day for the last few weeks. People asking for the new grants and the old grants the government announced. So first of all, what's the first of all is like the first homeowner grants. So the first homeowner grant is paid by the state government. Okay, your application must be approved by the state revenue department. Okay, it must be your first home for you and your partner. I do get this question asked, what about if I buy my home now and only in my name, I have the title on my name, and my wife a few years down the track buy hers, would she qualify for the first homeowner grant? No, she would not, okay? State to state are different, but the majority that I know it is, you would qualify for the first homeowner grants if you and your partner are both first home buyers, okay? And of course, you must never have applied and obtained the first homeowner grant. You must be at least 18 years of age, okay? The first homeowner grant is not for minors, so you need to be at least 18 years of age. And for this one, it is one of the applicants, at least one of the applicants need to be Australian citizen or permanent residents, okay? So for the first homeowner grant, yes, permanent residents qualify for the first homeowner grant. That's the visa test. That's the residency test. But so there are some criteria which we'll go through as well. So, and again, state the first home owner grant. It is different for each state. Okay. First of all, let's have a look at South Australia. So for South Australia, the property purchase, so it does need to be new. Okay, so the property purchased or built must be new and have a market value of $575,000 or less. The property cannot be more than $575,000. So let's say if you buy established one, the purchase price of that property cannot be more than $575,000, okay? And it does need to be newly built, okay? Meaning that after the property was constructed, no one lived in it, okay? And it is the first transfer after the construction, okay? And if you want to construct a property, okay, if you want to construct a property, if you want to build a property, the total value of the land and the construction cannot be more than $575,000. Let's say you buy a land, $300,000. The maximum construction you can have to qualify for the first homeowner grant is $275,000. The total, both the land and construction, would be $575,000. The other thing would be you need to occupy the property as an owner-occ, okay? You must live in the home for at least 6 months within 12 months of buying the property, okay? So let's say you buy the house, in month 8, you decide to occupy the property. You need, from that time that you started to occupy the property, to live in that property for at least 6 months. Otherwise, you won't qualify for the first homeowner grant, okay? And it is generally payable if you buy established, it's prior to the settlement of the established home. And if you build a house, it would be payable at the first drawdown. The first when the lender pay the first payment to the build, make the first payment available for the construction, and that's when the first homeowner grant become available. Okay, and it is $15,000 in South Australia. Okay. For Australian Capital Territory, it has been replaced, and no longer Australian Capital Territory offers the first homeowner grants, and instead the ACT currently having the home buyer concession, which is more like stamp duty exemptions, and it is to qualify for it, you do need to pass an income cap test, which is based on number of dependents. You are like your income is capped. For New South Wales, it's the property purchase or build must be new again, okay, and have a market value of $750,000 or less, okay. So for South Australia, we saw that it was $575,000. However, in New South Wales, it's $750,000, okay. And again, it does need to be new property or a new build, okay, and again it does need to be occupied at least for 6 months within the first 12 months of the settlement. And in New South Wales, the first homeowner grant is $10,000, okay. New South Wales also offer the first home buyer assistance scheme, okay, which is again a stamp duty exemption for the first home buyers. I will do a brief demonstration at the end where how would that affect the first home buyers, how much, if you are first home buyers, how much would you be saving, okay? And the first home buyer assistance scheme, for that it does not need to be new or construction. That could be established as well. And I will be doing a demonstration at the end if we get enough time to do that. The next one is Victoria. For Victoria, again, the market value needs to be 750,000, and for Victoria, it does need to be occupied again as an owner-occupied property. I believe it's at least 12 months in Victoria, within the 12 months. Okay, so you do need to occupy it from day one. Okay, the amount is $10,000 in Victoria as well. That's the first homeowner grant. Victoria also offers the first home buyer duty exemptions, and we will have a look at that. We'll do a demonstration on that one as well. I just didn't get the chance to to do all the first homeowner grants for all states. It does. We do have a limited time here. Just I can't really go state by state, but give us a call. Give us a call if you want to learn more about the other states and how much the first homeowner grant is and whether it is available or not in that states. Okay. The other thing that it was announced or started at the start of this year, 1st of January 2020, it was the first home loan deposit scheme. Okay, it is limited numbers. It's only 10,000 places a year. 10,000 was released at the start of this year, 1st of January, 1st of July. So it is a fiscal year, it's a financial year. Okay, 10,000 places every financial year. 10,000 places were released 1st of Jan 2020, and the second 10,000 places were released 1st of July, just 4 or 5 days ago. You need to be eligible first home buyer, and you can purchase a modest home with a deposit of as little as 5%. Okay, it is the Australian government that guaranteeing up to 15% of the asset property value to participating lenders. So it's not something that is offered by all lenders. There are some participating lenders. There are 2 of the big 4 participating in it, and some other smaller lenders that's participating in this first home loan deposit scheme. It does have other eligibility criteria which we go through. It's the most important things to understand is it is available only for citizens. It's not available for permanent residents. Okay, it is for citizens only. You do need to pass an income test. Okay, and you do need to have a notice of assessment. 2019-2020 notice of assessment. So meaning that you need to go and see your accountant, or you do your tax return if you do your tax return yourself, and have your tax return lodged, and the tax office send you a copy of your notice of assessment. You do need to have a copy of your notice of assessment available to be able to apply for this first home loan deposit scheme. Okay, and you go in a queue. you go in a queue. If a place is secured for you, you'll be notified that there is a place reserved for you for that first home loan deposit scheme, where from the day that the place is reserved for you, you do have 3 months. Okay, you do have 3 months to find and purchase your place, or to sign a contract for your place. If you could not find the place within 3 months, you may lose that reserved place. And if you want to apply for it again, you do need to go to the queue. Okay. For the coronavirus period, however, they have extended that 3 months. Okay, and that was because of the epidemic of the coronavirus. I'm not sure whether they would extend the time for this time as well. I'm not sure. The income test, we said, it's another thing that we do need to pass. It is for single people. It's $125,000, meaning that you can only earn up to $125,000 if you are single to qualify for that. If couples, the combined taxable income for both needs to be no more than 200,000. Okay, you definitely do need to have 5% genuine saving. You do need to be a genuine first home buyer to qualify the first home buyer criteria. You do need, as I said, it's for citizens only, and the owner-occupier requirements are to move into the property within 6 months from the date of settlement. The important thing is you need to continue to live in that property while the home loan is guaranteed under the first home loan deposit scheme. Okay, you cannot leave the property as an investment property or rent it out while the property is secured by a first home loan deposit scheme home loan. Okay, it's illegal. There are thresholds. There's a price cap on their properties in each state. I just show you the thresholds. It is different for each state. So if you go to the if you search for the first home loan deposit scheme, okay, you go to the property price thresholds. That's where you get the prices thresholds, meaning for New South Wales, capital cities, the maximum property price can only be $700,000. Okay, so if you buy a property with a higher price, you won't qualify for the first home loan deposit scheme. For Victoria is 600,000. Okay. Again, for the capital city, for Geelong is again 600,000. For Queensland is 475,000, and that's for Queensland again, capital city. For Western Australia, capital city again 400. South Australia 400, Tasmania 400. They are actually, as I said, it's for the capital cities. It is a good website. If you just like search by your postcode, it does tell you exactly how much the price threshold is. Let's say 3,000. It does, if it does work. Okay, so for, let's say, Chinatown, okay, it does tell you. So you put your postcode here, the postcode of where the property is, and it does show you how much the price, the property price threshold is. Okay, let's get back. If you're buying a vacant land, need to enter into a building contract within 6 months. Okay, and it is important that you do have a building contract in place within 6 months, and the lands need to be purchased within the same home loan that is guaranteed by the scheme as well. If the land already owned, okay, you would not qualify for the first home loan deposit scheme, okay, because you won't pass the ownership. You won't pass the ownership test because the land would be secured by a different home loan which is not within the scheme, okay. So you won't qualify for the first home loan deposit scheme if you already own the land. Let's see here, okay. Now, the new scheme that was announced in response to the COVID-19 recently, it is the Home Builder scheme. The Home Builder scheme is a time-limited grant that the main reason for the enhancing that scheme is to help the residential construction market to bounce back from the coronavirus crisis. Okay, we do need to understand that. So the main reason for this grant is to keep the tradies at work. Okay. And provides eligible owner-occupiers with a grant of $25,000 to build new home or substantially renovate an existing home. So this is not only for first home buyers, it is for first home buyers as well as for people who are looking to build their next home as an owner-occupier as well. Okay. And the Home Builder scheme, it does complement all other state and territories existing grants, like first homeowner grant or the stamp duty concession and other schemes that it's offered by the states. The eligibility criteria for the Home Builder scheme is as well. So the person needs to be a natural person, meaning that you cannot build or purchase the property in a name of a trust or a company. It needs to be in your natural name. Okay, you need to be at least 18 years old. It is, again, this one for Australian citizens only, okay? You do need to hold a current Australian citizenship when you are applying for this scheme, okay? It's I have received calls, people are asking me that they have applied for the citizenship. No, you won't qualify if you want to apply for the scheme now, okay, because you do not hold current Australian citizenship. To be eligible for this one, you do need to hold current Australian citizenship, as well as for the construction. You do need to have a contract signed after 1st of June 2020 and up to 31st of December this year. Okay, so it's a time-limited grant. Again, it's an income test. You do need to pass. Similar to the income test that was for the first home loan deposit scheme. It's $125,000 for single person, and it's $200,000 for couples. Okay. The other thing is you need to meet the owner-occupier requirements, okay, which is we went through the who are classified as owner-occupiers. The other thing you need to meet is the price cap. Okay, the price cap requirements. So when you are building a new home, it's up to $750,000, okay, land plus construction. So the total value of the land and the construction cannot exceed $750,000 to qualify for the home builder scheme. For the substantial renovation, the renovation cost needs to be between $150,000 and $750,000. Okay, it cannot be less than $150,000, and it cannot be more than $750,000. And the property value, it cannot exceed $1.5 million pre-renovations. So let's give you an example. Let's say for the substantial renovation, let's say I do have a property valued at 1.2 mil, and I want to do $150,000 renovation in my house. Yes, I would qualify for the home builder scheme. But if the property price is more than that, no, you would not. Okay. Good. I have started already receiving the questions for the home builder scheme. I do respond to them at our Q&A session. Okay, now the next step, I guess, would be for you you can book a free appointment with me, and I will assess your personal financial situation and goals to determine how much you can borrow, and we try to obtain your pre-approval for you. And I will find a selection of suitable loan options and help you choose the right one for you, and we'll help you to complete and submit the loan application to the lender that you select. And we do keep track of the application and let you know how it's progressing after submission with the lender. Now we got to the end of our slides, so I will go through the scenario that I said. We go through them just to demonstrate how that stamp duty exemption might help you to get to your home sooner in different states. Of course, unfortunately, it's not available for South Australia. It is available for some other states, which we'll be demonstrating now. And guys, here I just put my number here. So if you do want to book a free appointment with me, all you need to do, just send me an SMS. Okay, send an SMS with the word appointment. You will get a link to my booking page where you can book your free appointment. So just send the word appointment to the number 0455 438 028, and you will get a link to my booking page where you can book your free appointments. Now, let's get to the calculations. Okay, so let's go to SA first. Okay, so let's say you want to buy $600,000. You want to buy, establish $600,000 house. Okay, you do need to have at least $83,000 and $83,053 deposits available, and that is without even counting for your conveyancer fee. Conveyancers here in South Australia, they vary, but I'll put here $1,500. It depends how much you pay for your conveyancers. The majority of conveyancers I've seen here, they do charge about this $600-700. Okay. The other thing that you might want to have a provision for, it would be the council rate, in case the previous owner they pay the council rate upfront and you need to reimburse them that money. That's what I put here as well. So for $600,000, okay, you do need to have at least $86,000. That is being established. Okay, that is being established, and because the price is more than $575,000, which is the threshold for the first homeowner grant in South Australia, you won't qualify for the first homeowner grants. Okay, so this is the case for South Australia. Let's work out this one for the $575,000 just to see how much deposit you need then. Okay, so let's say you buy a new home in South Australia for $575,000. Okay, now here we have added the fees. You are the first home buyer. What you qualify, if you buy a new one, you would qualify for the first homeowner grant. That's $15,000. Okay, and if you buy a new one, you only qualify for the first homeowner grants. Okay, it is more than $400,000, so you won't qualify for the first home loan deposit scheme. We can, let's say, 92% is your base loan, and then you need to pay LMI. And guys, have a look here. See, LMI is different with all different lenders. Okay, and so every different lender charge different LMI, and that's one of the other things that's we do have a look at the. We need to have a look at the home loan fees holistically. Okay, interest rates. It's good to have a look at finding a competitive interest rates. However, you do need to have a look at some other fees that might be associated with the with your home loan, like LMI. Okay, as you can see here, different lenders charges different LMI, and these figures here might not be actually accurate. It might be higher or a bit less when we calculate the exact figure with the lender's calculator. But let's say if we go with this one, as you can see, the LMI, the LVR is higher than 95%. So we do need to have our base loan less. So let's say 91.15. Okay, here you can see. So if you buy a new established one, you do qualify. You do qualify for the first homeowner grant, and you do need to come up with $67,380 deposits. Okay, so that's for South Australia, guys. Now, if we change this one again, if let's say you decide to purchase a block of land for $300,000 and build $275,000 to qualify for both the first homeowner grant and for the home builder scheme. And guys, with the home builder scheme, it is not clear. It's not clear yet when would it be paid. Whether would it be paid at the same time the first homeowner grant is paid at the first drawdown, or whether at the end. It's not clear yet. Okay, so just have that in mind as well. Okay, so let's say $575,000, $300 purchase of land, and $275,000 for construction. How much deposit do we need? So since we do qualify for the 25 for the $25,000 home builder scheme. Okay. To borrow 552, let's say. No, we cannot. Okay, so again, let's go to that 91.5 base, and let's choose. I choose a lender in between. So there are lenders here, as you can see, that they offer a cheaper LMI. And again, this is not, it might not be an accurate figure, okay? I do need to calculate this one on the lender, on the lender own LMI calculator, okay? But here, just to give you a rough idea, okay, so if in South Australia, you want to construct $575,000 house, okay, and you qualify for both first home owner grants and for the home builder grants, okay, you do need to come up with 25,833 deposits, okay. How good is that? It is achievable, okay. This is for South Australia. Let me go through one for Victoria as well. For Victoria as well, we said that if you do buy or build a new one, you do qualify for that first homeowner grant as well. However, with the good thing with Victoria is that if you are a first home buyer, you do get the stamp duty exemptions. So let's say you were not the first home buyer and you do need to come up with $83,000, okay, with $83,000 deposit. However, since you are a first home buyer, as you can see here, the stamp duty for first home buyer, it would be waived for up to 600,000 here, okay? And instead of that 83, you come up only with 52,000. Now, if you buy a new one, then you qualify for the first homeowner grants, which is $10,000. Here we go. So that's $42,000. And even better, if let's say you found a land for 300 and build for 300, okay. Then if you qualify for the first for the home builder scheme, that would be only $16,000 for the Victorian people they need to come up with to purchase or to construct a 600,000 property, 300 land and 300 construction. Okay, and again for here you do need to add your conveyancer fee as well as some other fees that might be payable. Okay, so let's say $20,000 for constructing a $600,000 house for first home buyers. If you qualify for the grants, and even better for Victorians, for first home buyer Victorians, we said if we look at here. The threshold for Victoria here for Victoria for the capital city is 600,000. Okay, meaning if you do get a place reserved for the first home buyer, okay, you won't be paying this LMI. Okay, you won't be paying the 19,000 LMI, and you can even borrow more. Okay, 95. Okay, so it's really here, but yeah, 568, 568, 917. Okay. You basically don't need any deposits, but you do need to be for Victoria. It would be similar for New South Wales, but you do need to be careful with Victoria. The stamp duty for the block of land. Okay, if you buy a vacant, if you buy a vacant block of land, there might be stamp duty applicable. Okay, it is for Queensland. I know there is a stamp duty if you buy a block of land higher than the thresholds. It says you do need to pay stamp duty on the land. But give us a call. And we will go through. The numbers with you, and we can tell you how much deposit you need. Guys, I do have a limited time, so I can only respond to genuine clients, and unfortunately, I don't really have the whole time of the world. My time is limited, like everyone. So to do anything, to give you any consultation, I do require documents. Okay, when you book your appointments, you will receive a call from my colleague Gita Kashanian. She will give you a call and send you emails with the list of required documents. I do need those documents prior to our appointments to be able to crunch some numbers before we get to whether it's online appointment if you are in other states, or even here, some people prefer to have an online appointment, or you can come to my office in North Adelaide if you are in Adelaide. Okay. Okay, this here. Now, just put this one on the screen for people wanting to have the appointments. Now, the questions. Let's go through the questions. Regarding the home builder scheme, I did not get the passport ceremony yet, but I got approved the citizenship. Am I eligible? Look, I'm not a migration expert. However, I think there would be like a Vivo website, I think, where you can Vivo or Vivo something, Vivo check, where you can check here maybe in Vivo and see whether does it show, because that's what the lenders would probably use to check your residency status. Okay, if it does list you here as a citizen, I would think yes, you would qualify for the scheme. But if it doesn't list you here, I'd probably say no. Okay. But as you say, if your citizenship application has been already approved, it might be the site might be updated. Okay. The next question is, does LMI cover by loan? Yes and no. You see, the LMI, yes, could be capitalized on top of the loan. Okay, but it is. Let me bring it here. Okay, so you see the yes, it will be capitalized. I'm capitalizing it on top of the loan. So your base loan amount is 91.5. However, when we capitalize the LMI on top of the loan, your LVR increased to 94.81. So yes, it will be added to the loan. Okay. But you can calculate it either way. You can go, okay, so I can borrow more if I pay my LMI from my own money, or the other way, which we calculated here. We have it capitalized into the loan. Okay. Hope that answer your question. The other question I have here, assuming that that's in SA, I want to buy a new home with a $575,000. With 5%, it will be 28,750. How should I have a deposit of 67,380? Can you please explain the difference? Sure. I mean, it hasn't been really explained to people. Yes, the lenders, majority of the lenders, they do require 5% deposit, but they don't tell you that you do need to have the other fees available as well. Okay, so let's work it on the established 575,000. So let me 575,000. Okay. So as you can see here, it's $575,000. Okay. The 5% that the lenders say, this is the 5% here that you need to have the money for the LMI. As I said, yeah, you can work out the LMI either way. You can go, okay, I borrow 95%, okay, and then I would have the 47 plus then I pay the 47 deposit plus the LMI, okay, which will add up again to the same number, or approximately the same number. Okay, or you can capitalize it, which was the figure that we already had. Okay, so let's have that 91.5. Now, you see your fees would be 5%. Okay, 5% deposits, which would be calculated. Let me open up an Excel sheet. Probably it's easier to show you on the screen. How would the fees add up to that number? Okay, so SA. Okay. Okay, so let's go stamp duty. How much was the stamp duty? We had the stamp duty for 575 purchase. So did you say here it was a new home? Okay, yep. So the stamp duty is at 25,455. Okay, that's the stamp duty. Sorry, guys. It is a question for so many people, so it's worthwhile just having the try to answer it and clarify the confusion here. So 25,455, 25,455. So that's your stamp duty. Okay, then, and these are all government fees. Okay, the other thing is the 4,877. That's a transfer fee. No. 4,877. 877. The other fees are registration fee. It's 173. So 173 registration. Okay, and this was transfer. Okay, and and we added 1,500 here and 1,500 here for the conveyancer and for other sundries here as well. So let's say provision for other fees, $3,000. Okay. Now, if you add these ones, so this is here. Okay. These are so yes, so 33,505 so far. Okay. Now, what you also need to have is the LMI. Okay, the LMI that you need to pay as well. Okay, and be aware that you can borrow only up to 95% of the property value. Okay, so when you add, say here you had 526, so that's your loan. So that's the loan. Okay. That's how much loan you are getting. Okay. Your property price is 575. So you had $575,000. Okay, plus the fees. So these were the combined fees here, or the fees, we added them up. They are the fees. That's how much is the property price. Okay. Then you need to add the LMI. What is the LMI? It's 1,929. Okay. Here we go. Okay, so 627,000. So the $575,000 house that you are buying, it is costing you 627,634 when you add the LMI and the other fees. Now, so and guys, this is not a constant number. It is depend on how much is the LMI on the lender's charging. Okay, so this is the approximate LMI here that we worked it out, and also as you can see here, it's a 3,000. It's a provision fee. Okay, so it's not an exact number, but it is close to the right number. Now, the property is costing you $627,000. The bank would lend you 526,000. Okay, so how much shortfall do you have? So you have this one minus this. Okay, so $101,000. 101,501, and then you do have the $15,000. The something. You deduct the 15,000. Actually, I'm wrong here with this because the LMI is already calculated in. We added up in top of the loan, but here you have the first home owner grant, which is $15,000, and what you need to come up with is here. What's this minus the $15,000? and that's how we get the $67,000. Hopefully I didn't confuse you. Sorry for the mess, guys, but I couldn't really find any easier way to explain it other than using the Excel sheets. But again, if you do have any question regarding how it's worked out, please give me a call. Okay, that's great. Let's get to the next question. Can we use superannuation as a deposit? Okay, with the super, it is a super saver scheme that it was announced for first home buyers. You can draw your voluntary super contribution. So you cannot draw your compulsory superannuation that is paid by your employer. Okay, but if you made self-contribution, if you contributed more than what is required, you did it yourself. Okay, yes, you can draw that and use it as a deposit. Okay, hope that answer your question. The next question is, to be eligible for first home loan deposit scheme, the new home should not be more than $400,000 in SA. Yes, as we showed it there in the threshold, it is $400,000. Yep. Okay. I did have other questions that they were messaged to me. Let me just see. Okay. Yeah, the question was why the stamp duties are different in different states. Okay. Well, it is a fee that's charged by each state, by the revenue department of each state, and it's a state-related fee. So that's why it's different. Some states they do have those concessions and schemes in place, and some not, and that's why it's different in different states. The other question was raised was whether the type of visa make any difference for the first home buyer. Yes, as we said, well, some of the schemes, they were only available for citizens, and the first home owner grant was available for permanent residents as well. And there are some different criteria, and non-resident and non-citizens, they do not qualify for any grants, and they will be paying more fees if they want to purchase here. I'll just quickly show you here for foreign buyers and how much it may cost you, may cost them if they want to purchase here in South Australia. We use the same scenario of 575,000. As you can see here, without having the first owner grant, a permanent resident needs to come up with 82,380 for the deposit to be able to purchase. That's 575,000. However, for people with other visas, they do need to pay 7% more. So if you look at it here, foreign buyer surcharge, okay, so they do need to pay 7% more on top of the stamp duty on the other fees to be able to purchase it, as well as they won't be able to get more than 80%. I do have one lender that they do offer 80% LVR, okay, so meaning that you can lend 80% of the property value and you need to come up with the rest of the money, okay, which is 188,755, which the interest rate, it's higher than the majority of the interest rate and the lenders you see in the market. Last time I checked with them, it was around the 6% interest rate, okay. However, I do have another lender in my panel that they do lend to people with temporary visas, okay, which they lend only up to 70% of the property value, okay. So if the property value is being 575,000, they lend only 70% of that, and they do need to come up with the rest of the money. And actually, there is no LMI applicable here, since they are borrowing less than 80%, okay. So for $575,000, if you want to get like a very competitive interest, like a competitive interest rate on your home loan, and you still don't hold a permanent residency or a citizenship, you do need to come up with $246,255 deposits as a contribution, okay. Now let's get back here. Let's see if we have any more question. Guys, I can't see any more questions coming through, so hopefully you find the information useful, and hopefully we can help you to obtain your pre-approval soon, and to move to your first home. As I said, if you are required an appointment, you only need to SMS me the word appointment to the number 0455 438 028. You will receive a link for my booking system, where you can find a spot of time that it does suit you. You book your appointment with me, and we can specifically examine your financial circumstances and see whether how much you can borrow, and when you can purchase your first home. Guys, have a great rest of the day. Thanks again for joining me on this first home buyers workshop, and enjoy the rest of your Sunday. Take care, and bye bye.